everyone, and welcome to Stock Market Today. Ali Corman, Justin Nielsen here with a wrap-up of the action in today's session, where small caps took the lead in a very notable way today, Justin.
Yeah, it really was pretty impressive how much they were leading for the entire day. And it almost feels like we've got a little bit of this rotation where, before it was the big cap names that was driving everything, and now a lot more participation. But it's just one day. So we'll take a look at on Semiconductor, Macy's, and the regional banks, KRE as the ETF there, just to kind of get a sense of what happened today.
Yes. And first, a look at the major indexes. Here is the NASDAQ, which gained about 0.6%. The Dow up 0.25%. The S&P 500 up about 0.2%. But the Russell 2000, again, small caps, the big story today, with the Russell up 2.6%.
Yeah, and it was kind of funny because for a lot of the day, the S&P 500 and the NASDAQ were not showing great action. The indexes were kind of middling. They really did rally into the close, though. You can see on the intraday chart that there was a strong move at the end there, pushing it back to highs for the day and actually into new high territory. And so that's a good way to end the day. You'd like to see that strength into the close, even when you start off a little bit weak. But the Russell 2000 is really where it was at, pretty much the whole day. That was just up over 2%. Now, the Russell has been the lagging index for quite a while. So one of the things that I was really interested in seeing today is I was looking at the advances versus the declines. And you had some of the big cap names like, what we call the $1 trillion club, Google. And of course, the newest member, Tesla, was doing just fine today, but Google was down like 3%. That typically is going to hit the indexes pretty hard because it's such a heavy weight. But the advances today versus the decliners, it was like a 3-to-1 ratio of advances over declines. So that's going to help improve that advanced decline line that we've been noting on the NASDAQ has been suffering a little bit. So we should see a little bit of an uptick there. The NYSE, if you look at GMIAA, that one hasn't looked as bad, but broad participation there too. Again, a lot of advances today. So even though some of the big cap names weren't doing as much, and there was some weakness in some of the tech names, but a lot of strength elsewhere. And when I was looking at the Russell 2000 heat map, there was just a lot of green there.
Okay, so the last time the Russell broke out in November, that sparked a pretty big move for small caps. Is it too early to tell whether we're going to see something similar now, with it on the verge of hitting its highest levels since Q1?
It's probably too soon to tell right now, but I will tell you that a lot of the folks that you and I were talking to on the podcast, they were kind of in the small cap realm, and many of them were saying that they were looking at a strong Q4 for small caps. They were kind of looking at the summer as just something to get through, but they were looking at a strong Q4. So we'll see if what a lot of those folks were talking about comes to fruition, but it certainly does have that possibility. And again, it just seems like there is getting to be a little bit more participation here, as opposed to just the few names that were working for quite a while.
Right. And with the technical strength today, that was pretty notable here. We often talk about getting market exposure with ETFs at key points in the market. So today was a chance to do that with either IWM or TNA, if you wanted to go triple leverage, or UWM, the double leveraged ETF here, Justin.
Yeah, so that is something that we did do on Swing Trader, just to kind of up our exposure to the small cap realm. It's hard for us because we have some very strict dollar volume requirements in terms of what we can put on Swing Trader, because we don't want to move the stocks too much. So we did want that small cap exposure, which sometimes it's hard for us to get with individual stocks. So we went with UWM, the 2X Russell 2000 ETF by ProShares. So that's a way for us to participate in this move if we do continue here. And again, it's just another way of getting exposure and more participation, especially if you get that broad participation that's happening. And I don't know if Ali froze or if I froze.
Okay, it looks like I am back.
Excellent.
And let's take a look at FFTY here real quick. So Justin, growth stocks up a little over 1%.
Yeah. So again, here we have the growth stocks really participating as well. And again, it's not just one; it was a lot of them that were helping out on the IBD 50. And so this is the Innovator IBD 50 Fund, FFTY. This is getting back to new high ground. And it just feels like whenever FFTY is doing better, that's when our style tends to do better as well. So that is something else to be heartened by. If we can see that continue to improve, it's already had a nice run up here. But this is something that if you go to the weekly chart, if we can see this kind of get beyond these levels that it's been stuck at for since mid-February, then that could be a good sign, especially for the growth names.
Yes, and just a quick look at the 10-year yield, 0TNX. If I can type that, then we'll flip on over to the daily just to see where it looked like. So how do you think that the 10-year yield is impacting what groups are in favor? It's a story that we're continuing to see play out.
Well, a lot of times we were looking at, the move up in the yield, of course, being something that's going to hit the higher valuation stocks. Especially those that are on the NASDAQ, the growth names. But there's been a little bit of a disconnect from that normal correlation. So at this point, I'm watching the 10-year Treasury yield, but I'm really paying more attention to the individual stocks and the and the indexes themselves. But certainly we would expect maybe some more financial strength. We have XLF on leaderboard, and we put KRE, the regional bank ETF, on Swing Trader today.
All right, and we will take a closer look at that here shortly. But first, let's take a look at On Semiconductor. Big move here for the semiconductor manufacturing stock on its earnings report, closing the day up more than 14%, and some big volume behind this move today, Justin, and it closed so well.
Right, exactly. So look, this is extended at this point. So my point wasn't necessarily to show, here's something you missed, it's really, I was doing my research this weekend and I was looking at the industry groups, and I noticed, okay, one of the industry groups that moved up the most was the electronic semiconductor manufacturing. Now, we've been talking a lot about the semiconductor fabless names like NVIDIA and AMD and Marvell and all of those. But it seemed like the manufacturing and the semiconductor equipment groups were also starting to get some participation. And so On was one of the stocks that kind of caught my attention. Of course, it was going to have earnings, so there was nothing you could really do with that. But take a look at DIOD. That's another one that kind of popped up on as in terms of a setup. That's right there by the new high ground, and also STM. So that's got earnings in 2 days. Diodes does, but STM, that has earnings behind it, and that just popped out recently. So these are all in the Growth 250, by the way. This is how I found them. I just was scrolling through the Growth 250 and noticing, oh, look, there's a few names in here, a few names on our IBD Live watch list, and this group really moved up a lot this past week. So it's a combination of looking at all these different factors. You'd like to see the group move there, and it certainly seems like we're getting that with semiconductor manufacturing right now.
Yes, we are. And checking in on Macy's, ticker M. Wow, this stock now looks like it's forming an ascending base of all things, Justin, up 7% today after a big move not too long ago in mid-October.
Yeah, so this has actually been having some surprising moves. I mean, you go back to, January, that big move that it had, in the middle of the month there, then kind of based, held on to a good amount of that. But now we've gotten this most recent move. It held on to a good portion of that, stayed above the 21-day moving average line, and this ascending base. What you typically see in an ascending base is a stock that is bucking the trend. When there's weakness in the market, yeah, it pulls back, but it doesn't pull back very much. It's mild, and you can see that for each of those pullbacks, it really didn't give up much ground, like maybe 10% or so. And when you see that happen once, twice, 3 times, Bill O'Neill used to talk about it as like the sports fake out. Like, you got a basketball player that kind of fakes one way, and then just as you think it's going to go that way again, the basketball player changes. And so he kind of looked at that as the ascending base personality. And a lot of times after that third time, he found that you could get some really strong moves. So Redmond Industries from 1967, this is one you can see in How to Make Money in Stocks. That was kind of the poster child for him, but he also 30 years later had a really great move in America Online in 1998, 99, when that had an ascending base. So it's something that you don't see very often, but it's worth noting when you do. And you got, this was also stock of the day, so that's worth mentioning. Bill Peters wrote this up, so you might check that out if you've got some time. But retail has definitely come on strong. The consumer has a lot of savings that maybe is burning a hole in their pocket, and we've got the holiday season coming up. So supply chain issues are still out there, but Macy's is saying that they're expecting that they're not going to see too much of a problem, maybe a little bit with women's shoes and a few things in the apparel, but for the most part, they're feeling pretty satisfied with how their supply chain is looking.
Yeah, I think a lot of people might be doing their holiday shopping even earlier.
A little bit earlier, right?
This year, because there's so much awareness now of these supply chain issues. We've been buying stuff all year long and seeing how it's gotten delayed. So
every time I pass by the beach and I see the 60 container ships just sitting off the shore there, and I was on a plane the other day and I actually did a count, and I could literally from the plane, because I flew out of Orange County John Wayne Airport, and I could literally count 68 ships is what I saw.
It's incredible.
And the harbor just waiting there. So
yeah, filled with how many hundreds and hundreds of containers each. Yeah.
My wife wanted to rent a boat and just start picking our stuff off if we could,
yeah. I get a little faster that way. Okay. So in the RS line blue dot on the weekly here, we've talked so much this year about how buying on the pullbacks is helpful, but this ascending base breakout for Macy's, we'll have to see. I mean, Boot Barn, speaking of shoes, this ascending base is working out so far. So we'll have to see how it goes for Macy's.
Yeah, I kind of prefer the one in Macy's a little bit, just because Boot Barn, that just seems more of its personality to do that kind of jump and then pull back. But Macy's has definitely shown that it's got more of a look that reminds me of Redmond Industries. So
good.
We'll see how it pans out.
Great. Okay. And you mentioned KRE at the beginning of the show. So here's a look at this regional bank ETF up over 3% today.
Yeah, and just pull up XLF, which is the Spider Select Financial, just for comparison purposes. This didn't look all that hot, today. So really, it was the regional banks. And here again, this was just part of my weekend research. I kept on going and seeing bank after bank, popping up. And these aren't necessarily the most exciting things, but a way to participate is, if you can't decide which one to buy, you can just kind of buy a basket of them, and that's what KRE offers you. So this is something that's been basing for a while, and now we had this little pullback, support of the 21-day moving average line, and a jump today. So this is something that we did put on Swing Trader. If it comes back down to the 21-day moving average line, you're not risking too much on this. But if it continues higher, then you could see some nice gains, especially with that 10-year Treasury yield improving. And then a lot of people were noting how I believe the 20-year was getting above the 30-year yield. So that happened last week, which is a very rare occurrence. Actually, I'm not sure if that's really ever happened before, but if it has, it certainly is very rare.
Yeah. Well, if 2020 and 2021 have taught us anything, it's that new things can happen.
Yeah,
so
expect the unexpected.
Never before been seen. So, all right, Justin, thanks for breaking down KRE for us. And thank you all for tuning in. We'll be back with more tomorrow morning on IBD Live, where we'll be joined by David Ryan, a U.S. investing champion, as well as longtime portfolio manager under Bill O'Neill, IBD's founder, mutual fund manager, hedge fund manager, as also a lot of great investing experience under his belt, and looking forward to having him return to the show as he does most Tuesdays. So take some time to join us tomorrow morning on IBD Live, investors.com/IBD Live. We'll see you there, everyone, and we'll see you right back here after.